Ladies and gentlemen, everything is riling up for a big move, and I cannot stress to you how important the next 48 hours is, right? We have the FOMC decision coming in 1 day and 10 hours, and guys, please do not underestimate the importance of this decision. This could be very, very big. If we do see a rate cut on this FOMC meeting, that could lead potentially to a S&P 500 top, which could top out all risk on assets, including Bitcoin. That is what people call the left translated cycle theory. Now, it's got many faults. I don't necessarily think it's the likely scenario. I've actually done a lot to criticize it in recent weeks. But regardless of what I think, and regardless of the faults, regardless of anything, this is a scenario that we cannot debunk decisively. So we need to pay close attention to it as not to get wrecked if it does actually play out, right? 1 day and 10 hours remaining. We'll discuss that in this video. We'll also discuss how important it is that the S&P 500 holds on to a particular ascending support line, because that support line is going to give us basically a lot of intel as to whether the left translated cycle is going to be valid or not. We're going to look into Bitcoin S&P 500 correlations. It's a very traditional market focused video today, but guys, just because it's focused on S&P 500, please don't click off. Please don't be an idiot. You need to see this. This is very important, right? Bitcoin and cryptocurrency is not just about Bitcoin and cryptocurrency. S&P and Bitcoin. Look at the orange line on the screen. Look at the candlesticks, right? Orange line is the Bitcoin chart. Candlesticks is the S&P. These charts are connected. I mean, it's undeniable. So what happens to traditional markets is very important for Bitcoin. Now, I don't want to sit here and act like I'm scared or I'm fear-mongering. I'm not. I'm just saying, like, if you're serious about these markets, you want to make money on these markets, you need to pay attention here. Because this is 1 day and 10 hours out to a FOMC meeting. So very big stuff. We'll also jump into the short term. Obviously, yesterday's video, we discussed very heavily the weakness forming on the short-term charts. In fact, we've reached the target I mentioned in yesterday's video. I said we'd see a breakdown from this formation. Within an hour, we broke down. We saw a vicious correction to that target. Good stuff there. I'll give you an update on short term. I'll give you an update on the Bitcoin weekly chart, Bitcoin in general, Ethereum as well. Lots of stuff going on there to briefly, recap and skim over, just so you guys are fully aware of the situation on both the macro and on the short and medium term charts. So let's get into it today, guys. Before we do so, please go ahead and check out the VIP group on Telegram. If you want to receive altcoin trading signals 4 times a week, right? These signals have a 78.39% win rate. We have over 200, I believe 180 maybe, trading results in that PDF document. You can see fully transparent. Every single trade we've ever taken is in there. 4 signals per week. You're also getting access on top of all of that to a VIP group chat where you can discuss the market 24/7, share charts, share ideas with other paying VIP members. Some good traders in there, some solid traders. So go ahead and join that exclusive community. It's going to help you a lot if you're interested. Right, let's get into the content. We're going to start out with Bitcoin. We'll work our way through into the S&P 500. You're going to want to stick around for that. That's actually really the bulk of the video, really. Right, so Bitcoin. Well, just first and foremost, we saw great weekly candle closes yesterday, and I don't want to confuse you from my introduction. I'm not bearish. I'm macro bullish on Bitcoin. I think Bitcoin's in a good position on the macro scale. We saw great weekly closes. We saw the bull market support band hold for support. In fact, not only that, we dipped into the bull market support band and then bounced to the upside, which is excellent, right? Because it means we grabbed liquidity from that support region, and that is a support region. It's not just where the bull market support band is. 63K is a very major buying region, and that's a region that we spoke about heavily. We went down to it as expected. We bounced out of it as expected. Good to see. But what we see now is the Bollinger Bands, right? Which is a French word, I believe. And apparently I mispronounce it all the time. I used to call it the Bollinger Bands. It's the Bollinger Bands, according to a lot of people in the comment section who apparently are French. I don't know. They are saying that these Bollinger Bands, or I'm saying the Bollinger Bands are compressing quite heavily right now, which is when basically they are tightening, right? So they're widening in the past, now they're tightening. And when you see the tightening of the Bollinger Bands, that generally represents a move coming shortly. It represents compression in the charts, and it's like holding a beach ball underwater, right? You can hold it there for a long period of time, but when you finally let go, when it compresses too much, you finally let go, it's going to come up, and not only is it going to come to the top, it's going to jump out of the water as well. That's exactly how you explain Bollinger Band compressions. These compressions can only last for a certain period of time. And what you generally see is that when the Bollinger Bands come to the defining levels of the range, that is generally when you're going to be seeing a breakout quite shortly. So we look at 2023, for example. The range in 2023 here was between 32K and around 24K. What you'll notice is when the Bollinger Bands perfectly connected with the upper and lower levels of that range, that is when the compression was maximized, and that is when everything was pent up for a big move, and we saw that big move. You can go ahead and just do that analysis basically anywhere. And you can do it on basically any time frame as well. If we zoomed into the daily chart, what you'll see, and we'll just do it quickly here, zoom into the daily chart, and what you'll see is that every time we see Bollinger Band compression, for example here, you see those big moves start to form. It's really the swing point. Even over here, that Bollinger Band compression, top line coming down quite nicely. And if we want even more intense Bollinger Band compression, again, looking at these scenarios, here, so it's a very important indicator. And the fact that it's compressing quite heavily on the weekly chart, which is quite rare. I mean, we haven't seen it for a long period of time. Last time we saw Bollinger Band compression on the weekly chart was back here, almost a year ago. The fact that it's happening now means that we are running out of time in this price range. It's not going to hold for much longer. So do we break to the upside? Do we break to the downside? Now, I personally think we break to the upside. I'm macro bullish, but the fact of the matter is, it's just showing us that this range is not going to maintain for much longer. We will see a breakout either above all-time highs or above the low of the range again quite shortly. Probably, as I said yesterday, within the month of August. I'm a big believer that the month of August will be a breakout month. And guess what? So is my community, right? I did a community poll yesterday, and yeah, we've got some mixed results here, but for the most part, only 23% of people think that Bitcoin will maintain within the $60,000 to $70,000 range within the month of August. So that means, right, that 77% of my community thinks we're going to be seeing a move out of this range within the month of August. And most of those people, right, 37% and 26% say we're going to be seeing a move to the upside, right? Some people even saying above $80,000. So most people agree with me that we're going to be seeing a move out of this range in August. I believe it will be upside at this point, and most people seem to agree with me on that as well. So this is very much the last days, the final days, maybe the final weeks of this price range. So get ready for some interesting price action. With that said, we can get into the medium term and short term. Doesn't look too bad. I'm not very bullish on this, medium term right now. I think there are some warning signs. Like, for example, we have some exhaustion forming. We have a bearish divergence of a daily chart RSI with higher highs and, lower highs on the RSI. That's a little bit concerning, but it's not terrible. Okay, we flipped the mid-range level. You can see this mid-range level right here. We flipped that very decisively. Yes, we saw short-term exhaustion yesterday. We discussed this and we predicted this scenario. Played out perfectly. If you watched yesterday's video, you know that. Maybe even you made some money on short scenarios. I know a lot of VIP members did. We had this ascending wedge formation with descending volume and bearish divergence on the RSI. Broke down from that formation, went down to 66K as expected. Do I think the short-term bottom is in? I think it's likely. I think it's too early to say though, right? What I will say is that if we break 66K, we're going straight down to 63.8, and then we're in a bit of a troubled situation because then we have this kind of double top formation, which is not ideal. But right now, I think this local bottom is 66. I don't think this is a time which you want to be entering more shorts. I think you want to see how this plays out here because that was the target I listed. And it looks like, that's a target that's built up on major support, not only from the mid-range level, but also from things like the top of the bull market support band. So this will be the ideal bottom at 66K. As mentioned yesterday, let's just see how it plays out. Again, not massively bullish here on the medium term and short term, but I am leaning bullish. I do think it's likely that we do see the bottoms here in medium term and short term, but it's not like amazingly strong price action here. We've got some sort of, exhaustive structures forming. You could even say really that we have a broader, larger ascending wedge forming that I've just drawn out there, and that's a little bit concerning. So there are some concerns that unfortunately have seeped through from yesterday into today, but we can't really say too much about it now. We just have to wait to see what happens, wait to see whether 66K holds, and if it doesn't, then we can give you an update. Right, now we can get into the interesting part of the video, right? And this is the S&P 500 Bitcoin correlation part. This is the part where we discuss the interest rate decision. This is the part where we discuss a potential left translated cycle, a potential early top for Bitcoin. What do I think about that? Now, before we dive into it though, I'm just going to take a quick little pause here check out the Bitfinex and BingX exchanges, guys. These are the exchanges I advertise on this YouTube channel. My referral links are down below in the pinned comment description. If you click on those referral links, pick your exchange, either one. If you click on those referral links, you will get a 15% trading fee discount upon signing up, exclusively with my links down below. So every single buy, every single sell, every single transfer you make, 15% trading fee discount for life. So you can save literally thousands of dollars there. You're also getting access, on top of that, to a 5,500 USDT reward upon signing up on Bitfinex, and 4,000 on BingX, a chance to win those rewards as well. So you can't go wrong. They're both global non-KYC. They've both never been hacked before. They're both low in trading fees to begin with. Check out my links down below. Use them to sign up. Helps out me and it helps out you by getting on a good exchange. So let's jump right back into the content. Right. Where do we start here? Well, we can start with the interest rates decision in 1 day and 10 hours. In 1 day and 10 hours, we will be seeing a rate decision. Now, the majority, I guess the likely scenario here with this rate decision is a stagnation in rates. We don't expect to see anything. We don't really expect to see a cut. There's only a 4% chance of a cut at this point in time. The odds can shift, but at this moment, it looks like a maintenance of pausing rates is likely. If we move it through to September, we take a look at what the September chances are. We can see again, we're likely to see a cut in September. So going through the one in 1 day and 10 hours, we've got a pause, very, very likely. And in September, we're likely to see the first cut. Now, a lot of people are saying we could be seeing a cut in this rate decision coming up. They're saying that, the Fed has held rates high for too long and they need to bring it down rapidly. And there's speculation we could be seeing an emergency rate cut. That's what people are saying. I'm not really relying on that. I'm relying on the market data. The market data is very clear. The market data says it's unlikely we see a rate cut. But if we do, and this is where we're getting into what matters here, if we do see a rate cut, that could potentially be concerning because, let's look into it. Historically speaking, there have been two instances, and I have problems with this, by the way. I'm going to criticize this as I speak about it, but I'm also going to outline it as a possibility, just so you're aware of it, right? I don't want any bias in this channel. I want to clearly define all the probabilities, all the scenarios. Right, so in the global financial crisis, 2007, and in the dot-com bubble, rate cuts did lead to the S&P 500 tanking, right? Rate cuts led to bear markets. So a lot of people are saying right now that when we see rate cuts, we're going to see a bear market. So if we see rate cuts tomorrow, or if we see them in September, they expect us to roll over on risk on assets, right? Cryptocurrency, S&P 500, everything. Everything's going to go into a bear market. That's what people are saying. And they say that because we saw it in the global financial crisis and because we saw it in the dot-com bubble. Now, that is a possibility. It's a possibility, right? It's something we need to watch. It means that rate cuts aren't exactly bullish for the short term, for sure. It means there is a point of concern there, but it's also not confirmed. It's not a confirmed theory. In fact, there's a lot of problems with that theory. First and foremost, in order to extrapolate data forward and make predictions, such as a prediction that we're going to drop down on the S&P 500 and risk on assets because of rate cuts, you need to have an established trend, right? You can't extrapolate data if there's no trend. And two data points, the one right here and the one right here, that is not an established trend. That is two data points. For a mathematical trend, you need 3 data points. So that's problem one with that theory. Problem two with that theory is even if we were ignoring the fact that it's not an established trend, they are ignoring data points. They're ignoring the 2019 data point, right? We saw rate cuts in 2019. It did not lead to a bear market. We actually continued upwards other than COVID, which is a black swan event. And that occurred 8 months after the rate cut. And they're ignoring all the data points before the 2000 global financial, the 2000 dot-com bubble. So problem one, it's not an established trend. Problem two, they're ignoring data points both before and after the events took place. Problem three is that this is a unique market environment. We have never seen the Federal Reserve raise interest rates while the S&P 500 was correcting, right? So there are a few problems with the theory that people have, the bears, right? We'll call them the bears because that's what they are. There's a few problems with the theory that the bears have that the S&P 500 is going to tank here, right? That everything's going to top out this year and within the next few months. But even though there's problems with it, we can't fully debunk it. It's not debunkable because it is still something that's happened on 2 occasions. It's not a mathematical trend. They're ignoring data points, but it has happened on 2 occasions. And so technically, it could happen again. Technically speaking, we could see all of the markets roll over into a bear market when rates are cut. It's not the likely scenario. There are problems with the theory, but it technically could happen again. And for that reason, we need to be talking about it. And for that reason, if we do see a rate cut, when we do see a rate cut, we need to be watching the scenario closely so we don't end up in a position where we're holding our cryptocurrency bags into a deep bear market without even realizing it before it's too late, right? I hope you understand my points there. Now, what can we look at on the S&P to ensure that we don't get caught out here? Well, one of the things we can look at is this massive ascending support line in yellow. We know, for example, that the Bitcoin S&P correlation is very strong. It has deviated in the short term, but it's very strong. So we know, for example, that Bitcoin and the S&P are likely going to be moving together. Now, with that being said, we have a very strong ascending support line in the S&P 500. From October 2023 moving all the way into now, it's reflected on the RSI as well, so it's extremely strong. We are also seeing bearish divergence in the S&P on the weekly chart, which is quite concerning. And there is a scenario here where we see the S&P 500 break down. I suppose the problem arises is this. It's like, well, if the S&P 500 breaks down from this support line, we are going to see quite a significant correction, right? We'll probably pull back all the way to the prior all-time high, right? That's actually a likely scenario, or maybe even the low here, right? There is a scenario where we see a significant pullback. The problem we will face as cryptocurrency analysts is how do we distinguish a potential significant pullback from a macro bear market triggered by the rate cuts? I don't know how we do that. I don't know. So what I'm hoping is we don't have to face that scenario. What I'm hoping is that the S&P 500 maintains this support line in the price chart and on the RSI. If we lose those support lines when rate cuts occur, that's when we start getting a little bit stressed, and that's when we start taking a more conservative approach to the market. But with all of that said, I don't want to concern you too much, right? In my opinion, there's many problems with the left translated cycle theory. I just can't debunk it. And in the spirit of intellectual honesty, knowing that I can't debunk it, I can't tell you to sit here and not to worry about it. You have to be worried about it to a certain extent because you have to be watching it. And if you're not worried about it, you're not going to watch it, right? So be worried about it, be concerned. You need to watch these lines. They're very important. I hope you guys found the video interesting. I'll quickly conclude what I said here today. What I said here today and summarize is we are running out of time in this Bitcoin range. We are going to be moving out of this range likely, in my opinion, likely in August, right? In August, in my opinion, we'll be breaking all-time highs or breaking the low of the range. All-time highs seems like the likely scenario. However, there is a little bit of problems here for Bitcoin. We have some medium-term problems. They're undeniable, really. We have some short-term problems as well. It's not looking excellent here. It's not looking bad, but it's not looking excellent. And so this is a point in which I'm a little bit concerned. I'm concerned while remaining bullish, right? And that concern stems through to the rate scenario we're seeing with the traditional markets and the S&P 500 and all this kind of stuff. I really want to be seeing the S&P 500 holding the support line. I really want to be seeing Bitcoin breaking all-time highs as soon as possible so we can reset and get another consolidative structure, because we are running out of space to move here and it just looks like it's getting a little bit choppy. So look, that's just the honest truth. I'm not going to sit here and be a bullish ideologue for no reason. And I really don't want you concerned. I don't want you to confuse my concern with bearishness, because it's not. The charts are still intact. The structures are still intact. I'm taking a rational approach here and just pointing out the truth. So I hope you appreciate the truth and I hope you understand it fully. Guys, thank you for watching. I hope you enjoyed. Again, quickly, the VIP group on Telegram, altcoin trading signals, VIP group chat. Get in there if you're interested. Exchanges here. Bitunix, BingX, global non-KYC, never been hacked before. Referral links down below for 15% trading fee discounts. Check them out. We've also got, finally, the Crypto Academy's Become a Trader 10-unit course. It's on sale right now, guys. It's on sale. So if you're interested in getting access to this course for a limited price, a discounted price, you can do so. Read up all about it on the website. Once you make your payment, you've got lifetime access. You can learn about it whenever you want. You know, it's all there. University style course. We've got slideshows, videos, worksheets, everything you want, charts, everything. It's all there. Developed by myself and Megawell Crypto. So check that out if you're interested. And the last thing I will mention is for you to check out my second channel, JS Quinn. I posted my first podcast there 3 days ago. If you're interested in checking it out, you can do so, right? I really appreciate that. Give it a subscribe, check out the videos. I think you'll find them quite interesting. Thank you guys for watching. Hope you enjoyed. I'll catch you soon.